معرفة.
Bismillah ar-Rahman ar-Rahim. Let us discuss about home finance. Buying a home is a dream for many, and in fact, each one of us want to have our own dream house. And it's a very important achievement if a person has bought his own house, because he dreams about buying a house. So there are a lot of emotional attachments towards buying a house, owning a house, living in your own house. And financial institutions have played a major role in providing finance to fulfill this dream of customers, to buy your own home, a home in which you live with your family, with your parents, with your wife, with your children. You see your children growing in your home. So there are a lot of emotional attachments. So there are various structures, for example, which are today used to provide home finance. A Murabaha structure. You have an Ijara structure. Then again, based on what kind of property it is, if it is a developed property, it will be an Ijara structure. If it is an underdeveloped property, it will be a forward Ijara structure. Then another common structure which is used is diminishing musharaka structure. So these are some of the important structures which are being used by Islamic banks to provide home financing to its customers. Let us now discuss about diminishing musharaka. Diminishing, the word diminishing is used in this because the ownership of the bank on a gradual basis goes on decreasing, and hence it is diminishing. Why is it called as a musharaka? Because the property or the asset is jointly owned both by the bank and also by the customer. Let us take this example. In this example, just for the ease of understanding, let us consider that the value of the house is $100. So the $20 is paid as down payment by the customer to the bank, and $80 is what the bank puts as the balance amount, and with the $100 the bank purchases this house from a seller. After purchasing this house, the bank enters into a lease agreement with the customer. So now what we understand is that in this property, 20% of the share of the property is owned by the customer and 80% of the share is owned by the bank. Now what the bank does is that the bank leases the 80% of its share to the customer through a lease agreement. So based on this lease agreement, regular rentals are paid by the customer to the bank. Now on every date on which there is a payment in terms of the rent from the client to the customer, there is also a unilateral undertaking given by the purchaser to the bank mentioning that it will unilaterally purchase the portion of the bank gradually throughout the term of the lease. So on every lease payment date or the rent payment date, on the same date the customer purchases a portion of the property from the bank. So what will happen is that the ownership of the customer keeps on increasing in the property and the ownership of the bank keeps on decreasing in the property. So at the end of the term of the musharaka, all the ownership in a way is transferred to the customer and the customer becomes the complete owner of the property. During the term of the lease, because someone has to maintain the property, the bank appoints the customer as its service agent to maintain the property, to do certain actions like taking out, for example, insurance of the property. And because this is an Islamic transaction, it has to be a takaful, which needs to be taken, which is an Islamic insurance. Now let us discuss about the murabaha structure, how murabaha is used to provide home financing. So if this is a customer and this customer has approached an Islamic bank, in the examples which I am giving, I am not talking about the calculation and the methodology of calculation. For that you can refer the reading material on the website. But I'll explain the concept which is used to provide financing using different structures in relation to home financing. So for example, if this is a customer which has approached the Islamic bank, and the Islamic bank is using a murabaha structure meaning to say a kind of a sale transaction in which the cost plus the profit portion is being disclosed to the customer. At the same time, generally the murabaha in the market today are used as a deferred sale transactions. So the customer has approached the Islamic bank with an intention to purchase a house. So there is a negotiation which takes place. There is a unilateral promise which is given by the customer in favor of the bank, mentioning that if the bank purchases the house, then the customer will purchase the same from the bank. In this step 2, what happens? The Islamic bank goes and makes the payment to the seller, and the seller transfers the ownership of the house to the Islamic bank. Now after this there is a contract which is entered into between the Islamic bank and the customer, and this contract is nothing but the murabaha sale contract. In the murabaha sale contract, there is a cost price. So for example, if the house was purchased for $100, the Islamic bank will add its profit margin of 5%, and it will sell the house for $105 to the customer. And this $105 needs to be paid by the customer over an agreed period of time. So, and in an agreed number of installments. So the payment which the customer does will involve the principal plus the profit portion. And certain important things which needs to be kept in mind is that the murabaha sale contract which is entered into between the bank and the customer should only happen after the Islamic bank has purchased the asset from the seller. Only then the sale is possible. The profit margin can be linked to any benchmark. So in the market, for example, there are examples where any agreed benchmark is used to calculate the profit, whether it is LIBOR or whether it is a local benchmark, and the profit ratio is calculated. One more important thing is that in case the customer wants to prepay, so if this financing was done for 5 years, and within 5 years if the customer comes to the bank and says that it wants to prepay, in such a situation the customer can of course prepay, but the Islamic bank is not obligated to provide a rebate to the customer. So for example, if the Islamic bank was supposed to receive $105 from the customer within 5 years, and after 2 years the customer has approached the Islamic bank and says that it wants to pay early, the Islamic bank can accept such a proposal, but the Islamic bank is legally not obligated to charge less than $105 from the customer. So the payment obligation still remains $105, but the Islamic bank has the discretion to provide a rebate. So in that case, the Islamic bank may provide a rebate and collect less amount than $105 if the payment has been done before the agreed term of the murabaha. So this is another important point which needs to be kept in mind, that in case of prepayment, the customer does not have a legal right to demand for a rebate, but it is at the discretion of the Islamic bank to provide a rebate in terms of the early payment. Now here, let us discuss about how an ijara or a lease structure is used to provide financing for developed properties. So this is a customer, this is the owner of the house, and this is the Islamic Bank. So if the customer approaches the Islamic Bank with an intention that the customer wants to purchase certain asset, then it provides a unilateral undertaking to lease. So that is a promise to lease. So this is the first step which happens. The second step, the Islamic Bank goes and purchases the asset, in this case a house, from a seller. So the ownership is transferred from the seller to the Islamic Bank. The Islamic Bank now leases the property. Okay, so what it does is that it enters into a lease agreement with the customer. So this is the lease contract, okay, an ijara contract, which is entered into with the customer. So basically this is a lease contract. So let us discuss about how an ijara is used to provide financing for home finance to a customer. So if this is a customer, the customer approaches an Islamic Bank and the customer provides a unilateral promise to lease to the Islamic Bank. The second step is that the Islamic Bank pays the payment and purchases the house from the seller. So the ownership of the house is transferred to the Islamic Bank. The third step is that the Islamic Bank enters into a lease contract or an ijara contract with the customer. So the asset, which is this house, is now leased to the customer. And then the asset, because the lease has to start, the asset is also delivered to the customer, or the delivery of the asset is given to the customer. Now the customer stays in the house. So in the lease contract, a schedule of rentals are agreed. The structure used in this is a lease to own, meaning to say that the end purpose of the lessee or the client is to own the property. So what it does is that it pays the rentals on a regular basis, and at the end of the lease term, so for example, if this lease is structured for 5 years, at the end of 5 years, the ownership of the house is transferred to the customer. Now, how that ownership is transferred to the customer? It is transferred either through a unilateral undertaking, meaning to say that there is a contract which is called as a purchase undertaking, which is unilateral in nature, which is given by the customer in favor of the bank, mentioning that at the end of the lease term, I undertake to purchase the asset. So based on that undertaking, the ownership is transferred through a sale and purchase agreement to the customer. Or sometimes at the end of the lease term, the ownership of the asset or the asset itself is given to the customer as gift. So the ownership is transferred as gift to the customer. In such kind of structures, there is also a concept of service agency, because the asset needs to be maintained. So the customer is appointed as a service agent to maintain the assets, be to take Sharia compliant insurance on the asset, which is the kafil, to see to it that the asset is not damaged. So the lessee is appointed as a service agent through a separate service agency agreement. Then there are a set of undertakings. One undertaking is the purchase undertaking, which is given by the customer in favor of the bank, mentioning that in case of default by the customer to pay the rentals, or in case of maturity, the customer undertakes to purchase the asset. There is a separate undertaking given by the bank in favor of the customer, mentioning that in case if the customer wants to prepay, then the bank would sell the asset to the customer. So basically these are certain undertakings which are given by both the parties in a home financing structure.